Welcome to A Few Minutes with Peter Grandich. I'm your host, Al O'Grady. And for the next few minutes, we'll be talking to Peter, getting his insights on the markets, commodities, business, politics, sports, and life in general. Now, a few things about Peter if you don't already know. He is the editor of the Grandich letter, which was first published back in 1984. He has been a market strategist, a portfolio manager of 4 hedge funds, a mutual fund that bared his name, and is widely known for his accurate forecasts and no-hedge markets perspective. Now, he appears regularly on television, radio, and is widely quoted in leading financial publications. He's also the co-founder and managing member of Trinity Financial Sports and Entertainment Management Company, an insurance and estate planning firm specializing in servicing professional athletes and entertainers. As always, Peter, welcome back to the program.
Good to be back, Al. Very good after last Sunday, especially.
Yes, congratulations. A tip of the hat. The Giants did it. You must be walking on cloud 9 right now.
Oh, is it 9 that I'm down to? I thought I was up around 18.
Now, don't gloat. I'm trying to show a little bit of class here and congratulating the winner. But
one coffee to go, please.
Okay, all right. That's what it'll be, and I will certainly pay up on that. You don't like a double-double. I know that's a Canadianism. 2 cream, 2 sugar. I remember when I mentioned that to you before. You had never heard of that before.
Heck, I didn't even know where Vancouver was.
Okay, we'll save the best for last. Let's move on. Let's get down to business here. Peter, I understand you're going to be going on vacation, and good for you. And I know we won't be talking again until March. So why don't we do a rundown on the markets, especially the markets that you follow, and tell us really what's in your crystal ball for the next few weeks. Let's start with the U.S. stock market.
Okay. Again, I've been in a mode now for a few months, expecting the market to trend higher. I am not a roaring bull, which, people ask me, well, if you expect the market to go higher, I've heard this from people, why aren't you buying stocks? And I say, listen, you can't buy and sell everything, but I always repeat, it's not so much what you make, it's what you prevent from losing. And my attitude is that the Don't Worry, Be Happy crowd can move the market higher. As far as through the election and slightly after, but there's an enormous penalty coming to pay for the way the United States has lived or hasn't lived, and the market, I think, will eventually pay for that. But until such time, the least likely resistance is up, and I continue to think so. Very short term, the market has reached some critical resistant areas, numbers it hasn't seen in a few years, and I suspect that they'll need to digest it and even back it up a little. But overall, I think as we get into the spring and summer, it would not come as a surprise that the Dow is moving towards its old high. Having said that, it would actually be a blessing if we made it to the old high, because I think we would have our first real shorting opportunity since the fall of 2007. But for now, the trend over time is higher.
So let me ask you this. From a technical analysis perspective, the old high, is that going to be some sort of resistance level? And when you say shorting, maybe it's going to hit that old high and start bouncing back. Is the old high certainly some sort of benchmark to keep an eye on?
I believe we're in a counter-trend rally in a secular bear market. A secular bear market that will last as long as a decade, if not longer. And so even though we could get back to that old high and actually go a little bit higher, then we come back down again. The net will be is that the market over a 10-year or so period will not have gone anywhere fast. I'm not in the camp, and haven't been since the fall of 2007, that I expect a major decline where we'll be down 25, 33, 40, 50%. I do think, however, because of the unescapable fundamentals that I believe the United States can escape, and that is its overburdened debt load that it can't service. And so eventually that even takes the market down, but not down to the point where it collapses or anytime soon. And that's why I've resisted almost daily emails from readers and others suggesting, that the market's about to collapse. And if you look at what I would call the biggest of bears, some very well-noted ones, basically following them since the market bottomed in 2009, any gains you would have made if you followed them from 2007, would basically be gone now. So I think it's been prudent to avoid the short side, and I still think at least for the balance of this year, it will be prudent to avoid the short side when it comes to the U.S. stock market.
Okay, moving from the U.S. stock market to one of your favorite topics, and of course that's gold. Is it safe to say that your mother of all gold bull markets remains on course?
Oh, yeah. Again, every time there's a hiccup and, the market declines a little, the emails increase, and so that always suggests to me that those people are not properly positioned because relatively real short-term moves shouldn't affect people's overall portfolios. But having said that, I think the market corrected again in December. It has consolidated its recent move, and I think we will see as we get into the spring and summer a move higher. Now, one of the safest things people can do if they're still on the fence on whether they should buy gold right now, I believe if we can get 2 consecutive closes above the psychological 1800, that will absolutely, other than something totally unforeseen, lead the market to a new high. So if you're extremely conservative, want to take most of the risk out, but willing to give up some gains from that, wait until the market has 2 closes above 1800. Again, if you, on the other side, are concerned that the perma bears may actually be right this time, so long as the market stays above the lows that it made in December, which were in the low 1500s, we're okay. But if we take them out for some reason, then bulls like myself may actually end up being wrong. I don't think that's the case, but I think that's the parameter people should work in. Don't get too concerned on the downside unless we go below the December lows. And if you really want to wait to a total coast is clear attitude, then wait till we get above 1800 at least for 2 trading days in a row.
Okay. I know you turned positive. Let's change our discussion from precious metals to base metals. I know you turned positive on base metals late last year after a couple of years of greatly underweighting, your portfolio in that area. What about some specialty metals? I'm thinking uranium, perhaps.
Well, uranium I was clearly early, but I've learned in this game also after almost 30 years it's better to be a year too early than a day too late. And people say, well, what do you mean by that? I said, well, you buy something at 10, it falls to 5, but eventually goes to 20. Yeah, you were early, but it worked out. But if you're a day after it reached its ultimate top, you're only going to be in it as it goes lower. And what I think happened in the uranium situation, and, I didn't foresee, what would happen in Japan. But for the most part, I think that's worked behind us. I mean, some stocks are still lower from where they were, but others have moved higher. And I think the news that we saw in the U.S. this week, something I don't think people 10 years ago ever imagined they would see in their lifetime, and that is approval of new nuclear power plants in the United States. I think that's a signal that the worst is behind us, and to look for uranium, excuse the pun, to glow again. I getting back to the base metals, I think it's a mixed bag there. I think copper is, remaining strong between 350 and 4. Zinc has bounced nice and now is, consolidating that gain. Maybe some of the other base metals like nickel aren't as strong. But the total avoidance or very lightweight that I had exposure to them, I think is behind us. And part of that is that we saw a correction in a lot of the supply and demand scenario. We're starting to see reasons to think why, zinc in a few years could be in a deficit. So I think overall the commodities argument still continues to the bullish side.
Okay, let's a couple of follow-up questions regarding uranium. Do you really consider uranium a base metal? It seems like a bit of an anomaly.
No, it's a specialty metal.
Exactly.
I mean, yeah.
Exactly. Now, further to that, you had mentioned about some nuclear power plants. I've actually read from the time that it's actually approved in concept to the time that it's actually up and running could take as many as 10 years. So, I mean, there's quite a long lag in order, to actually benefit any sort of increased demand for uranium.
But markets move in anticipation of that. When uranium rallied to 100 and crazy number, 140, whatever it was, a couple of years ago, much of that rally was based on expectations of supply and demand 10 years out.
Right.
Okay, and markets tend to do that. The important thing was it looked really bad hours, days, and weeks after the tragedy in Japan. It looked like there may be just a whole total fundamental shift, or at least that's what the comments were that you were reading in the papers, towards nuclear energy in the world. Countries were announcing they were not going to use it anymore and shut it down. But here's the bottom line. The demand that governments have to provide power is enormous. I mean, there's just so much more demand for power, and there's no new magic wand. There's no new formula that suddenly, you can just switch from a source you were counting on and go to another. And that's why I think at the end of the day, there is not going to be a change in that perceived outlook for supply and demand uranium, and that's why I think the shares are coming back again.
Right. I don't want to beat this to death, but just one last point regarding uranium. I don't really hear, and correct me if I'm wrong, I don't really hear a whole lot of uranium supply-demand effects vis-a-vis China. I mean, China is just, as we all know, is just massively growing. There was an incredible demand for cement. There was an incredible demand for copper in China. But obviously China needs electricity as well. And I agree with you. I mean, nuclear power is certainly something that has to be considered. Do you actually hear a lot in terms of uranium demand growing in China?
Oh, yeah, that's one of the biggest reasons for the supply and demand argue. And, somebody made a point the other day, and they said, listen, you never know if there is a tragedy. It can be enormous. But he says, even when you look at 3 Mile and Isle, Chernobyl, and Japan, the net effect of a widespread impact to people, over hundreds of thousands of miles or whatever, didn't happen. So there's yet to be that tragedy that would change everybody's mind and say, look, I'm willing maybe not to have my air conditioner on, but I don't want to be nuked to death. But the reality is there's, other than the atom bombs that went off, when it comes to nuclear energy, there hasn't been a disaster enough to where, not to say what we saw to underplay what we saw in Tokyo and the tragedy of loss of life there,
right,
but economies of scale and how impacted it was, so forth and so on. Now, they'll probably tell us, and we're in time, that we came a lot closer to that than was being reported. I mean, even some of that's coming out now that the NCR here in the U.S. really didn't have a real idea what was happening in Tokyo, and the officials in Tokyo weren't being honest with people. But the fact remains, there's still such an overwhelming demand for power, and there's coming yet still no real alternative to find a different source.
Okay, let's change gears here. I think we beat that one to death.
I don't think you should keep saying beat to death when we're talking about nuclear energy, by the way.
Well, okay, maybe a bad choice of words, and if someone is offended by that, well, my apologies.
Somebody will be. We always get an email, so don't worry about
it. That's true. So I'll join the fray on that one. Something that you think is really dying a slow death: the U.S. dollar. It seems stuck. It seems stuck lately in a very tight trading range. Should I assume you feel it will eventually be bucking that trend and start trending lower?
I mean, if you go back and people would just read late November, December, Google U.S. dollar for comments and seeing what was said, that how everybody was getting long it, and why predictions the market was about, to explode to the upside, and, all these things. And the index can't even really, it's hovering around 80, and its low is around 70 on the U.S. dollar index after being 140s and 150s. So it sounded good, and there was a lot of talk, but the only thing that's kept the dollar from collapsing is the focus on the euro right now. It's the worst of two evils at the moment. But eventually, Europe is going to get through. It's advanced to get through its scenario where we have in America buried our heads in the sand again about our economic woes and our problems with debt and our currency. So, to me, all we've seen is a classic counter-trend rally, and again, a secular bear market that, in my opinion, eventually goes to new lows. So I just don't see any reason to be aggressively long or long the U.S. dollar. I'll say it again, I moved the bulk of my dollars from U.S. to Canadians and sits in Canadians' financial institutions, which, by the way, if the IRS is listening, I report on my income tax.
That's good.
But I still, like that. And just throw a comment about Canada. Canada's no great safe place either. It's facing some of the issues America is facing, too much debt, an aging society, demographics, et cetera, but it's not in an acute phase that I believe the United States is in. And so, a lesser of two evils. And, of course, the other question we always get, and since we already spoke about gold, is, well, you like gold, but it's priced in dollars. And if the dollar goes down, aren't you kind of like nullifying it? Well, yeah, the dollar may go down 10 or 15%, but I think gold's going to still end up going a lot higher than 10 to 15% from here. So it's okay that it's priced in dollars because net, I'll still be better off in gold than in dollars.
Okay, going from gold, dollars to bonds. I know you think that U.S. bonds are certainly the worst investment for the next 10 years, but what about foreign bonds?
Maybe the lesser of two evils, but I'm concerned that, the for lack of a better word, worldwide quantitative easing and masses of money that's been created in Europe and what have you, eventually leads to inflation, and inflation is the death blow to bonds. So, for the 1 in 1 million sophisticated trader, would I be long Canadian bonds and short U.S. or long European bonds and short U.S.? Yeah, but for 99.99% of all people, locking in anything, including insurance annuities and all, at 1, 2, or 3% for 5, 10, or 20 years now, I think is a guaranteed loser because A, inflation I already believe is higher than that, and B, if I'm right and there is inflation again and bonds start to double or triple in yield, which doesn't sound like a lot, going from 2 to 6%, but anybody that bought a bond that had a 2% yield and then that same bond has a 6% yield currently, you're going to be looking at a 60 or 70% loss of principal on that bond.
Right.
So I think bonds are just a bad word for the next decade. I just don't want to be in them or own them. Okay.
Further to that, when I really don't want to argue a whole lot in terms of the percentages, but a balanced portfolio, usually 50% equity, 30% bonds, and 20% cash. That 30% bonds, is that still viable using, what you were talking about in terms of duration, or don't even, throw the baby out with the bathwater? Don't even have bonds as part of the balanced portfolio?
Okay. I'm no longer an investment advisor, so this is not investment advice, but I'm speaking for myself.
Okay.
I've always hated, even when I was an advisor, the theory that you always stocks, bonds, and cash, and it's just a matter of balancing it. First of all, I believe that's all part of one long gimmick that the Don't Worry, Be Happy crowd or the financial institution on Wall Street, whatever you want to call them, created to capture assets, collect fees and charges as they control the money, as if anyone, including myself, is going to be able to correctly figure over time when it's time to switch from one to the other versus the other versus the other.
Right.
I heard and have battled. I'll give you an example. I won't name the fund, but I have a friend who manages one of the biggest growth funds in the United States. We worked together early in the brokerage in the 80s. He went the mainstream, Don't Worry, Be Happy crowd route, became very successful, has 10 or 15 portfolio managers under him, makes oodles of dollars, and he's been sending me since the late 80s the same joke about mining and gold, and that's a man standing next to a hole in the ground with the caption that says, a gold mine is a hole in the ground with a liar standing next to it. That's the standard joke I've gotten from him for 25 years till this past year.
Okay.
And this past year, he finally woke up and said, Pete, you may be right after all. I'm starting to see this country really in a blah, blah, blah. And he started to buy in to the picture that you and I have been discussing, like we just discussed now.
Mm-hmm.
Okay, so I expect, he's going to be announcing his resignation, or the fund is going to be switching over, and before you know it, he's going to have a lot of gold and everything. Now, the fund never changed. Did he change his private portfolio holdings? Possibly. Did he make those changes? No, because he's still making all sorts of dollars to manage a certain growth fund, to have stocks and sometimes bonds in it and so forth. And that's how Wall Street works. It's always been my argument, and I experienced it myself when I worked as a market strategist, that the Archangel Gabriel could appear Sunday night in the 10 leading market strategists on Wall Street's home that Sunday night and tell them God has sent a message that Dow is about to fall 50%. And they believed they saw the Archangel Gabriel, and they, with good intentions, head to their office to tell all their clients to sell. I don't believe 9 out of 10 or 10 out of 10 of those firms will ever let them do that.
No kidding.
So I believe that. I'm not saying it's.
I know you do. I know you believe that.
I believe that, as I love my daughter and wife to death. And so to know that's the case, that there's no objectiveness, even if the Archangel Gabriel shows up, to know just a few years ago, Wall Street effectively sold hundreds of billions of dollars of bad cars to people around the world and then bought life insurance on the drivers so they can collect twice, then I'm supposed to accept that in that ballpark with these people running it, the game is fair and balanced. It's the furthest from it. And so, when I listen to these guys come on and, well, stocks and bonds, and you turn on the TV, but, based on this, we're switching to this, that, and the other, maybe that individual or even group may have good intentions, but that's a hodgepodge of just keeping a con game going in my book. So, I know we got off beat and all, but you got it out of me. Maybe I really need a vacation after this.
Actually, I'm glad I asked the question so you could get that one off your chest. No,
well, it's I've said it before in different ways. I've talked about it in my book and so forth and so on. And listen, I'm no angel. If people read my books, there's a lot of disclosures in there that I'm not proud of what I did over the years. But the bottom line is, I think the mistake that people make, and that includes your listeners and our listeners, is that they somehow think that we're playing in a very fair and balanced game, and that our pea shooters somehow come to fight Goldman Sachs' nuclear bombs. So I think we always have to keep that in the back of the mind, no matter what aspect of the market we're in.
Okay, let's change direction again. Maybe going to a more geopolitical perspective. In your blog, you continue to point to growing tensions in the Middle East and a serious military conflicts on the horizon. Not a matter of when, not a matter of if, but when. Your thoughts?
Well, there'll be people that paid a lot more money on the Sunday talk shows to discuss this, and probably are more familiar with it and so forth. But I think it's obvious that what is taking place in the Middle East in numerous countries, and of course highlighted by Iran, and where now they're just outright saying Israel has to be wiped off the face of the earth. U.S. is part of it, this, that, and the other. I don't know, like it says, I don't know when it's going to happen, but I'm not questioning if it's going to happen. And then there are a lot of cards to be played out and so forth and so on. I posted earlier this week a video. I urged my readers make sure they watch. It was from actually Glenn Beck's private network now, an interview that he did with 3 leading security authorities, military, economic, and what have you. And it was clear and evident to them that, we are moving very close to something of most serious proportion. So will that, if and when that happens, impact and change some thoughts in the markets? Absolutely. But I don't think we don't participate in the market and miss X amount before that happens, because the night it happens, we're not suddenly going to lose 30 or 50%. We're just going to have to realize that's a game changer and change our game.
Okay. Okay, we've talked about business, politics, going from a macro perspective. Let's go to a micro perspective. Any individual companies on your radar that you'd like to talk about?
Maybe just a few. I think one of the things, because, again, it helps me address to, I know readers of mine listen to this. I've got a lot of emails this week about the great increase in activity in Crosshair Energy. I just think, that's part of the renaissance again in the uranium sector. The fact that Crosshair's principal management group, exploration group run by Mark Morabito, has joined forces with Stan Forbes of Forbes in Manhattan, and some people are speculating this is going to come their main uranium play. So, there was a placement done. I think I noted in my blog that I participated in that placement. there's a company that once traded much higher and could work its way higher on that. I was glad to see, because it's, I've stressed this all the time, it's my largest holding, personal holding. It's a client also. Excelsior Mining went to new highs yesterday on the back of a very long, the actual research report, I think is 32 pages, put out by Euro Pacific. Now, what I found interesting about that, and learned some things about it, Euro Pacific, many people know that name because they see Peter Schiff, who's a very well-known commentator in North America, has both a Canadian and U.S. division, and I'm told this was the first combined research report for both divisions. And so there's some anticipation and hopefulness that this could become a major talking point of theirs. And, of course, Peter Schiff and his exposure. But what I appreciate of it is I think people have concluded, like their analysts did, that Excelsior was too cheap. I mean, they have a target price in 12 months of $2.60. The stock is trading at 80 cents. And, at 50 cents and 60 cents, I was banging the drum for months. So I feel kind of vindicated. At least there's one other idiot besides me that likes it. Spanish Mountain Gold is coming very cheap again. I actually had some bids underneath the market. This is a company that not only has advanced its development, it's taken a lot of risk out of it, but now has some more exploration upside than they had a few months ago. So there's something I would look at. Sunridge Gold, again, it rallied strongly this week. As I noted in a blog posting, I think yesterday, it was due for a correction. It's having it, but it's just a great, great story. And I guess finally, I try to imply to people, people say, well, I'm talking about it because I'm buying it. Well, I'm buying it because I really, really like it. That's why I'm buying the stock. I don't buy them to lose money. But a company that I really think people should look at, it trades by appointment only in North America. It trades up in Canada. Wits Gold, symbol WGR. This is an unusual play. It's a South African mining play. South African stocks used to be the most popular among mining. Now they're most forgotten. And in South Africa, there's really no in-between players. There's either very large producers or very raw exploration companies. And I think Wits Gold has managed to bridge that gap now by noting the purchase of a 50% partnership in a producing mine in South Africa, plus has tremendous upside potential on well over 100 million ounces of in-the-ground resource that they have. And it's just too cheap. Now, it trades by appointment. Sometimes it just trades a few hundred or a few thousand shares a day. There was a block overhang in the market that I bought out earlier this week, closer to 5. It's printing up closer to 6, and I think the stock could be worth a lot more. And but again, it's an unexciting, slow trader, and people that want action and see trading are not going to see it. But it's something that, unlike a very risky speculative junior, I think a lot of the risk to the downside is out, other than if the metal market itself collapses.
Okay. Fair enough. Peter, you've been working hard. You're going on a vacation. Tell us about that. Where are you going?
Well, I'm going down to the Sarasota, Bradenton area for hopefully fishing, golf, greyhounds, flats. I hope to visit some sightseeing. I almost once moved to Sanibel Island off of Fort Myers, Florida. Hope to visit that back again. I haven't actually been on a vacation with my wife in about 15 years. So
why did it take you so long, Peter? Why did it take you so long?
Well, you make a good point, and I would make that to everybody. I mean, I've had a few trips to Ireland, but really to take just some time off, and I won't even be time off. I mean, there'll be limited posting on the blog, but I won't be staring at the computer from the market opening to the market closes, which is something that has been done. And you're right. It's an interesting story. If I may just take 2 minutes, I'd like to tell this story. When I was a broker, one of my clients was in the Forbes 100. So at one time, he was one of the so-called wealthiest people in the world, and I lost touch with him when I left the business in the late 90s. And then about 3 years or 4 years into the new millennium, to maybe 2003 or 4, I got an invite from Mary and I to come to a wedding he was holding out in the Hamptons, where, if you ever remember the movie, the original Wall Street movie, where Michael Douglas is walking on the shore and he's talking to what's his name, on the phone. That house in the back is actually this guy's house.
Oh, no kidding.
Or it was back then.
Right.
So we go to this wedding, and I remember pulling in with Mary, and I said, look, Mary, one thing I can tell you is we are the poorest people at this place. I mean, it was the who's who of rich pa's. There were celebrities there. Anyway, we're into maybe an hour or two of the reception, and some guy taps me on the shoulder and says, such and such would like to see you. And I go up, and, it's one of these things that has 14 bedrooms. I mean, it's like you see on TV, but
Sure.
in real life,
Right. Mm-hmm.
And I open the door, and as soon as the guy behind me closes the door and stays outside, the guy I knew, my friend, whatever you want to call him, starts to cry. And the first thing I go, oh, man, he's got really bad news. He's probably dying or something's going to tell him he's got cancer.
Right.
And he just starts to weep. Peter, you're the luckiest guy in the world, blah, blah, blah. And I'm looking at him, and I know what he's got. I got. And then I said, such and such, you should be so happy. Your daughter got married today. You have all of this. And he says, you don't understand. My daughter got married. I said, yeah, you should be happy. He said, Pete, she's my youngest girl, the last one gone. I don't know her favorite color. I don't know her best friend's name. I don't know nothing about her. And she's gone. And I can't redo it. And that moment, that guy would have given up everything or a lot he had so that wouldn't be the case.
Right.
And I tell that story, and I remind everybody that you've never heard yet somebody of great wealth who died and said, damn it, on his deathbed, if I only spent more time at work.
Yeah, that's right.
Yeah, you're right. We get caught up and we keep thinking and we get on this, this treadmill and we don't turn the machine off and go down and relax and recharge. So that's what I hope to do.
Yeah. Little words of wisdom. An old friend of mine, he told me, you never see a Brinks truck following a hearse.
There you go.
Yeah. One last question before you go. You're heading off to Florida. Are you going to be going down I-95 driving a bus with 40 New York Giants in the back?
No, well, first of all, the most amazing thing about this, which I can just tell you, is, first of all, I got to go in the parade part in Manhattan. I got to ride in that red bus that you saw in the back with family members. And I looked out. No, I'm going to tell you something.
Okay.
And they said there was 1 million people there. And I'm saying after the Redskin game, you couldn't find 20,000 Giant fans.
So Giant fans are fickle. That's what you're telling me.
No, what I'm just saying is everybody loves a winner.
Yeah, that's true.
I think half the crowd didn't even know who the Giants were before the Super Bowl. But, they won. Everybody got caught up in it, et cetera, et cetera. That's a good thing. What I'm grateful for, and I will post it again tomorrow, is something that my favorite Giant player, and I'm going to put up in a post, probably one of two favorite persons that are players is Justin Tuck.
Okay.
And part of that is for something Justin did a couple years ago. He came down. I sit on a cancer foundation down here that basically deals with kids that, for the most part, have terminal cancer, and it's usually for families that fall in the cracks. They're not poor enough to get many of the charitable things, but they certainly have been wiped out if they had any wealth, and most never had wealth to begin with. And we kind of find things to help them with carrying their children and all, and then also try to be like a Make-A-Wish thing where we try to get the kids. So we had a client at the time. The boy said he was a big Giant fan, and Justin Tuck was his favorite player. I went to the chaplain and Justin. I said, Justin, there's this kid down here. Just agrees to come down one day, and which was good enough. I mean, they get their requests 1,000 times like that. And I assumed that when Just came the first time, was going to pay time with the guy, and that was going to be it. And the end result is they hit off a relationship. They became the best of friends. And they exchanged bracelets, and it would be seen from that day. And then the boy would, after a visit to a game 9 days later, he passed away. Just would wear that bracelet. And going into the Super Bowl, ESPN did a great story about it, which I put up on the blog. But subsequently, if we all remember what happened in the Super Bowl, Just had a great game. There were 2 sacks. You can see him, and people don't understand it, when Justin grabs his hands, bows to the audience, that's to him that he's paying homage to his maker and so forth and so on, just for a little insight so instead of, acting like an idiot like some other guys do. And they did a follow-up and added to that video, which I'm going to put up tomorrow about it. But why I say that all is everybody had a great time, and, guys are going to be out and so forth. But as I note in this post that I hope to put out tomorrow is I've never understood a verse in the Bible as I understand it now. In Romans 8:28, it says, "All good things work through God, who those who trust and believe in Him." And you look at something like this boy, dies by 19, has cancer for 6 of those 19 years, suffers greatly, tragedy. His father died of a heart attack. His mother has breast cancer now. And you say to yourself, God, where's the good in that? I don't see any good in that. And then you see all of this, and you see what came from it, and the testimony and what it made people feel and realize about life, and what it did for Justin and Justin's ability. Because part of my work with athletes in the ministry I'm involved is to make them realize that they've been given one of the greatest gifts in the world, and they have a platform where they can stand for good and stuff versus the terrible stuff you hear about and so forth. And
exactly.
So on.
Yep.
And Justin took the high road. You have to know him. You'll always see he is just he's just a great man, and he's been a friend, and he's very humbled. He's always been that way, and he's one of the guys I don't think will change no matter what this happened in the Super Bowl. So to me, as great as the win was and all, to the story, and we all feel that Evan, who was the boy, played a part in that, and know how Justin was right after the game and how emotional he was and some of the things he said to the media, it made us understand and appreciate that God does work all good in the end, no matter how bad things look at the moment.
Okay, and I think on that last phrase, we will end it on that uplifting note. As always, Peter, thanks very much for your time, and I look forward to talking with you when you get back from Florida sometime in March.
Thank you.
Okay. And this interview appears on my website, corporateinterviews.com. It can also be accessed on YouTube and iTunes. Just type in Grandich in those respective search engines to not only access this interview, but interviews that we've done in the past. Now, if you have any questions for Peter, by all means, send me an email. Very simple. My email address, al@corporateinterviews.com. We'll certainly do our best to mention it on our next program. But please make sure that your questions are very generic in nature and not company-specific. Having said all that, for Peter Grandich, I'm Al O'Grady. Thanks very much for joining us.